All right, so you've brought some fascinating stuff for us to dig into today
Yeah.
about yacht financing in 2025.
Yes.
Obviously we want to make this really relevant to you folks out there listening who are the ones considering these kinds of big purchases.
Yeah.
We're not talking about financing a car here. We're
Right.
talking about some pretty serious financial planning.
Absolutely. This is the big leagues.
This is the big leagues.
We're
Yeah.
talking about strategic decisions and really trying to bring clarity to a complex landscape
Yeah.
so you can make the best choices for your situation.
Exactly. And just to kind of give you an idea of the scale of this market we're looking at.
Yes.
The global super yacht market's predicted to hit almost $10 billion in 2025. That's a lot of yachts.
Wow, that is a serious chunk of change.
Yeah, so clearly this is a topic worth understanding.
Absolutely.
So the first question that kind of jumps out when you look at all this material is,
Yeah.
why would someone who could easily buy a yacht outright even consider financing it?
Right. It seems counterintuitive at first glance, right?
Yeah.
But when you delve into the reasoning, it actually makes a lot of sense, especially for individuals like yourself who are managing substantial wealth.
Yeah, the sources really emphasize this idea of liquidity preservation.
Exactly.
Keeping your capital free and clear for other opportunities or, unexpected events.
It's all about flexibility.
Yeah.
You don't want to have a huge chunk of your capital tied up in a depreciating asset like a yacht when it could be working harder for you elsewhere.
That makes sense. So it's not really about affordability, it's more about strategic capital allocation.
Exactly.
And speaking of strategy, our sources point out some pretty interesting potential tax advantages.
Oh, yeah, those are key.
So if your yacht qualifies as a second home,
Right.
which basically means it has, facilities for sleeping, cooking, and a bathroom.
The basics.
Yeah, the interest you pay on the financing could be tax deductible, just like a mortgage on your primary residence.
It's a fantastic perk if you meet the IRS criteria.
Yeah, although there are limits on how much interest you can deduct.
That's right. The current limit is $750,000 for combined first and second home mortgage debt.
Yeah.
So it's crucial to work with a tax professional to make sure you're maximizing those benefits.
Definitely got to run the numbers.
Absolutely.
And on top of that, there could be even more tax advantages if you use your yacht for business purposes.
Right. Things like depreciation could come into play.
Yeah, so it's really worth exploring all those angles with your financial team.
For sure.
Now, beyond the financial side of things, financing also gives you more options in terms of the kind of yacht you can get.
Oh, absolutely.
It's all about leverage.
Leverage is key.
Yeah, you can potentially get a larger, more luxurious vessel than if you were just paying cash.
It can really open up your possibilities.
Yeah, and another point our sources bring up is hedging against depreciation.
Right.
Luxury yachts, like a lot of high-end items, tend to lose value over time.
That's a fact of life.
Yeah, but by financing a portion of the purchase, you're essentially protecting more of your own capital, which you can then invest in things that might appreciate in value.
That's a smart strategy.
Yeah, it's like playing both sides of the field.
Exactly.
Now, speaking of the market, our sources give us a little insight into the trends we're seeing in 2025.
Okay, what's the latest?
So it looks like new yacht prices are holding steady, but the pre-owned market might have some more attractive prices.
Interesting.
Yeah, maybe because there are more boats available.
All more inventory.
Right.
So it sounds like timing could be a factor here.
Exactly. Locking in a good financing deal, now whether you're going for new or pre-owned, could be a savvy move.
I'd say so, especially with interest rates being what they are these days.
Okay, so let's talk about the actual financing options.
Okay, let's dive in.
Our sources lay out several different approaches. Perfect. So first up, we've got the traditional yacht loan or marine mortgage.
Yeah, the tried and true method.
It works pretty much like a mortgage on a house with the yacht being the collateral. You can usually choose between a fixed or variable interest rate.
And what are the rates looking like these days?
Well, our sources say that in 2025, competitive lenders are advertising rates starting at around 6.49%.
Not bad.
But, of course, that can vary depending on a bunch of factors.
Of course, things like the size and age of the boat, your credit history, how much you're putting down.
Right, and, the lender's own risk appetite.
Absolutely. Each lender has their own criteria.
Yeah, typically you're looking at repayment terms of 10 to 20 years.
Okay.
Maybe longer for the really big yachts.
The super yachts.
Yeah, and you'll usually need a down payment somewhere between 10% and 20% of the purchase price.
And as you said, a bigger down payment can often mean a better interest rate.
Exactly. So what are the pros and cons of going the traditional marine mortgage route?
While on the plus side, fixed rates give you predictable payments, which is great for budgeting.
Right, no surprises.
And the rates can be lower than some other options.
Plus, you can spread the payments out over a longer period, which can make things more manageable.
That's a big plus for a lot of people.
But on the flip side,
Yes.
you're putting your yacht up as collateral.
Right. So if you can't make the payments,
I can take your boat.
exactly, repossession is a real risk.
And you need to have that down payment ready to go up front.
And don't forget, the application process can be pretty intense.
Yeah, lots of paperwork.
Lots of scrutiny.
Now, another option our sources talk about is marine specialized lenders.
Okay, these guys are the experts.
Right. So how are they different from a regular bank?
Well, as their name suggests, they focus specifically on the yachting world.
So they really understand the ins and outs of that market.
Exactly. They know how to value luxury vessels, and they understand the unique needs of yacht buyers.
Okay, so what are the advantages of working with a specialist?
Well, they might be willing to offer more flexible terms than a traditional bank.
Okay.
Their approval processes can be faster too.
Because they're already familiar with the industry.
Right. They might also be more open to financing older or unusual boats that a regular bank might shy away from.
Interesting.
Plus, they can often give you more specialized guidance throughout the whole process.
Like they're more than just lenders, they're almost like consultants.
Exactly. They can help you navigate things like international registration and ownership structures.
That sounds pretty valuable.
It can be, especially if you're dealing with a complex transaction.
Now, are there any drawbacks to using a marine specialized lender?
Well, their interest rates might be a bit higher than some of the big banks,
Okay.
and they might require a larger down payment for certain types of yachts.
Gotcha. So it's a trade-off.
It is, you're paying for their expertise and flexibility.
Now, another interesting approach our sources highlight is securing loans against other assets.
Ah, so this is for people who have a lot of wealth in different forms.
Right, like investments, real estate, art collections, that kind of thing.
Exactly. They can use those assets as collateral for a loan to buy their yacht.
So what's the appeal of this strategy?
Well, for one, the interest rates could be lower than an unsecured loan,
Okay.
and you might be able to borrow more money.
Plus, your yacht isn't directly tied to the loan.
Right, it's not the primary collateral.
But what are the risks?
Well, if you default on the loan, the lender could seize those other assets.
So the stakes are pretty high.
They are. It's not a decision to take lightly.
Now, our sources also briefly touch on unsecured loans.
Right.
But it sounds like those aren't very common for big purchases like this.
They're usually for smaller amounts or for people with exceptional credit.
Because you're not putting up any collateral.
Exactly. So the lender is taking on more risk
Which means higher interest rates.
and lower borrowing limits.
So for most people looking to finance a yacht, this isn't really a viable option.
Probably not.
Okay, let's move on to some alternative approaches.
Okay, like what?
Leasing and charter management programs.
Ah, yes. These can be interesting options.
Yeah, so with leasing, you basically get to use the yacht for a certain period of time.
Like a long-term rental.
Right, you pay lower upfront costs and fixed monthly payments.
But you don't own the yacht at the end of the lease.
Exactly, so it depends on your goals.
Right. If you want to eventually own the yacht, leasing isn't the way to go.
Now, what about charter management programs?
So these are for people who are okay with sharing their yacht.
You make your yacht available for others to charter when you're not using it?
Exactly. And the income from those charters can help offset your costs.
Like loan payments, maintenance, docking fees, all that stuff.
Right. Some programs will even handle the management and upkeep of your yacht.
Wow, so that could really take a load off your mind.
It can. But of course, there are trade-offs.
Like what?
Well, you have to be willing to share your yacht, which means you might not be able to use it whenever you want.
Right, limited personal use.
And while it can help with expenses, it might not be the most financially beneficial option in the long run if your goal is to own the yacht and use it frequently yourself.
Okay, so it really depends on your priorities.
Exactly.
Our sources also mention something called balloon payment structures.
Ah, these can be a bit tricky.
Yeah, how do those work?
So with a balloon payment, you have lower monthly payments for most of the loan term.
Sounds good.
But then at the end, there's a huge final payment due.
Oh, a balloon payment.
Exactly. So you need to be very careful with your financial planning to make sure you can handle that big lump sum when it comes due.
That's a good point.
It can be a good way to manage cash flow in the short term, but you have to be prepared for that big payment down the road.
Okay, last but not least, let's talk about refinancing.
Ah, yes, a familiar concept.
Just like with a house, you can refinance your yacht loan.
Exactly.
If interest rates drop or your financial situation improves.
It can be a great way to lower your monthly payments or shorten your loan term.
Or both.
Or both, exactly.
Okay, so we've covered a lot of ground here.
There are a lot of options to consider.
Now let's talk about the application process.
Okay. What can people expect?
Well, our sources say it's more rigorous than getting a regular loan.
Which makes sense. We're talking about a lot of money and a unique asset.
Right. The lenders really do their homework.
They want to make sure both the borrower and the yacht are a good risk.
So what's the first step?
I highly recommend getting pre-approved for a loan before you start shopping for a yacht.
Why is that so important?
Well, it gives you a clear idea of how much you can borrow,
Okay.
and it puts you in a stronger position when you're negotiating with sellers.
So it's like having your financing ducks in a row.
Exactly.
Now, what kind of information will you need to provide during the application process?
Be prepared to share detailed financial statements, tax returns for the past few years, proof of income and assets, and of course your credit history.
So pretty much everything.
Pretty much. And you'll also need to provide all the details about the yacht you're planning to buy.
Make, model, year, price, the whole 9 yards.
Exactly. They want to make sure the yacht is worth the loan amount.
And speaking of the yacht itself,
Yes.
what kind of scrutiny does it go through?
Well, for pre-owned yachts, and often even for new ones, the lender will require a professional marine survey.
Okay, what does that involve?
A qualified marine surveyor will inspect the boat from top to bottom.
Wow.
They'll check the hull, the engine, the systems, everything.
So it's like a home inspection, but for a yacht.
Exactly. And they'll also provide an independent valuation of the boat.
To make sure it's in line with the loan amount?
Right. The lender wants to make sure they're not lending more than the boat is worth.
Makes sense.
After the survey, the lender's underwriters will review all the documentation and assess the overall risk.
And if everything checks out?
Then you'll move on to the closing.
Where you sign all the paperwork and finalize the purchase?
That's it. You're officially a yacht owner.
So it's a pretty involved process.
It is, but it's all designed to protect both the borrower and the lender.
Okay, so for our listeners who are high net worth individuals and decision makers,
Yes.
what are the absolute key things they need to keep in mind when they're thinking about yacht financing?
All right, well, first off, there's the loan-to-value ratio, or LTV.
What's that?
It's the amount of the loan compared to the appraised value of the yacht. Lenders usually want the LTV to be 80% or less.
So you need at least a 20% down payment.
Exactly.
Then there's the debt to income ratio, which we talked about earlier.
Right. The lender wants to make sure you can comfortably afford the loan payments along with all your other expenses.
And what about liquidity?
That's crucial. You need to have enough cash on hand to cover the down payment, closing costs, and the ongoing operating expenses of owning a yacht.
Which can be substantial.
Oh, yes. Our sources say it can easily be around 10% of the yacht's value each year.
Wow. So it's not just the loan payments you have to think about?
Nope. There's a lot more to it.
What else?
You absolutely need comprehensive marine insurance.
Of course.
And don't forget about the tax implications we talked about earlier.
Right. Working with a tax advisor is essential.
Absolutely. They can help you maximize any potential deductions.
And given the complexity of these transactions,
Yes.
it's probably a good idea to get legal advice from a maritime lawyer.
I would highly recommend it. They can help you with things like ownership structures, financing agreements, and vessel registration.
Okay, so it's a team effort.
It is. You want to have the right experts on your side.
To wrap things up, let's look at that case study our sources provide about financing a super yacht.
Okay, a real-world example.
So in this case, we have a high net worth individual who wants to buy a $30 million 150-foot super yacht.
Okay, not your average boat.
Nope. And this individual wants to preserve as much of their liquid assets as possible.
Smart thinking.
So they looked at 3 main options.
Okay, let's hear them.
First, a traditional marine mortgage
A classic.
with a 20% down payment, $6 million in this case,
Okay,
and a 15-year term at a fixed rate of 7.5%.
that's not bad.
The monthly payments would be around $222,457.
That's a chunk of change, but manageable for someone at this level.
Right. The second option was to secure a loan against their investment portfolio.
Using their existing assets as leverage.
Exactly. So they were able to get a $24 million loan at a lower interest rate of 6%.
Because the loan was secured.
Right. And that resulted in lower monthly payments than the marine mortgage.
So that's attractive.
Yeah. And the third option was a combination approach.
A hybrid.
They took out a smaller marine mortgage
Okay.
and combined it with a secured loan against their investments.
So they got the best of both worlds.
Exactly. They minimized the down payment on the marine mortgage, but still got a lower overall interest rate because of the secured loan.
That's a clever strategy.
Yeah. So what did they end up choosing?
After careful consideration with their financial advisors and legal counsel,
Right.
they went with the combination approach.
It allowed them to preserve more liquidity while still getting the yacht they wanted and leveraging their existing assets.
A well-rounded solution.
So, as we come to the end of this deep dive, what's the main takeaway for our listeners when it comes to yacht financing in 2025?
Well, the big picture is that financing a yacht can be a very strategic move for high net worth individuals.
It's not just about buying a book.
It's about managing your wealth and maximizing your financial flexibility.
Right. You need to understand the different lending options, the application process, and all the key factors involved.
Everything from loan-to-value ratios and debt-to-income assessments to ongoing costs and tax implications.
It's about making informed decisions.
Absolutely.
Well, this has been a fascinating conversation.
It has.
So for someone in your position, considering all these different financing structures and the current market trends, what do you think is the single most important factor that will influence your decision to finance a yacht in 2025?
That's a great question, and I think the answer will be different for everyone.
Of course.
But I encourage you to really think about your long-term goals, your risk tolerance, and how a yacht fits into your overall financial plan.
That's great advice.
And don't be afraid to seek expert guidance.
Talk to financial advisors, tax professionals, maritime lawyers.
Exactly. They can help you navigate the complexities and make the best choices for your unique situation.
Excellent. Well, thanks for joining me today for this deep dive into yacht financing.
It's been a pleasure.
And for all of you listening out there,
Yes.
we hope this has given you a valuable roadmap to navigate this exciting but complex world.
Happy sailing.
Happy sailing indeed.
Yeah.
And for those of you still pondering that final question we posed,
Yes.
we encourage you to keep exploring and to connect with those experts who can help you clarify your path.
The journey is just beginning.
Exactly.
Bon voyage.
Bon voyage.